Bliss with Elizabeth show, ready to go live in 3, 2.
When you think selling and buying a home,
when I think real estate, I think List with Elizabeth.
Elizabeth Klein.
Elizabeth and Klein. And here is the host of the List with Elizabeth show, Elizabeth Klein.
Hello, everybody. Welcome back to the List with Elizabeth show. As you know, I am Elizabeth Ann Klein, host of the show. Excited to be here with you today. I have such a great topic to chat with everyone about today. Thank you all for tuning in yet again. I really appreciate all the comments that come from each and every show. Thank you. Keep them coming. If there's a topic you would like to see covered, please reach out to us and let us know. We would be happy to accommodate. So before we get started, I just want to give, again, a big shout out and thank you to all my subscribers. If you haven't subscribed to this show, feel free to do that now. It helps other people find the show, gets the word out there about real estate in Northern Virginia. If you are in the Northern Virginia area and you have specific questions as a buyer or a seller, please feel free to reach out to me. I am a specialist in Northern Virginia. I help buyers buy and sellers sell residential real estate. If you are not in the area, also feel free to reach out. We have a national agent referral network that will help you anywhere in the U.S. We can plug in and make sure we get you 2 to 3 top-notch agents and professionals in your area to help you along your journey to buying a home or selling a home. So with that aside, let's get into our show today. You know, as a real estate professional, sometimes we see people who are buying or selling property for themselves as their primary residence. But many times after that, people start thinking, okay, now that I have my primary, maybe I'm going to invest in something, or maybe I'm going to sell one of my rentals. And when I get those phone calls, sometimes there's a topic that comes up called a 1031 exchange that may be of use in these particular circumstances. And you may have heard this term thrown around in circles when you and your friends are chatting real estate, or you may have seen something on the news about this 1031 exchange. So today we're going to uncover what that is. And to help us do that, we're going to welcome to the show my good friend over at 1031. Here, Realty Exchange Corporation here in the Northern Virginia area, Gina Newman. So Gina, thank you so much for taking time out of your busy day to be here with us today. Show. You want to tell us a little bit about yourself, just personally, and then kind of how you got to where you are with your company?
Of course. So I am a wife and mother. I have 2 grown boys. One has graduated college, the other one's in his senior year. And I really got into this business as an avenue of, they were off to college. I'd been a stay-at-home mom, for many, many years. And, this, just kind of fell into my lap a little bit with some very good friends I have that already worked here and just raved about how wonderful this place was to work. So they were looking to hire. I threw my name in the hat, and here we are almost 4 years later.
Okay, awesome. So tell me, before you worked there, did you know much about 1031 exchanges?
I did not. I really knew very, very little. I knew that this kind of program existed, but I really didn't know, the ins and outs of everything and the way that a 1031 exchange worked.
And I think that's where a lot of people are. They've heard of it.
So it kind of helped me because I didn't know how things worked and what the process was. I feel like that helps me kind of with my clients a little bit, especially the ones that have never done it before.
Yes.
To help guide them through the process of how everything should work.
Relate to that and help guide them. So a question I get a lot of times is, if I'm selling my primary residence, do I need to do a 1031 exchange? So let's just back up for a minute and let's explain to everyone watching, what the heck are we talking about? What is, just the bare bones, what is a 1031 exchange and who would use that?
So the 1031 exchange is for those investors people that own investment properties. And you are, in the bare bones terms, you are taking one investment property and simply exchanging it for a new one. And
Perfect.
by doing
Perfect.
so, that helps you defer those taxes from that sale.
Okay. So there you go, guys. So the reason you would do it is to defer taxes on any gain that you would have when you sell the property. So let's say you own a rental property, and let's say you've owned it for 5 years and you bought it at $400,000 and now it's worth $500,000. If you just outright sold that rental property, Uncle Sam's going to come in and want a cut of the appreciation that your profit. So the $100,000 profit between the 400 and the 500, you're going to have to pay a hefty tax amount. Regina, what is the amount nowadays?
I believe this capital gains is federal rate, I believe, is 15% right now. But then you're going to have some state taxes in there, and every state varies.
Yes.
So people could be looking from anywhere from maybe 20 to 25%.
Yes. So let's say, to avoid writing a check for $20,000 just to sell the rental property, the option becomes, okay, let's take the sale, and instead of cashing out the proceeds and paying the check, we're going to buy a different rental property. So this is only for rental property. This is not for someone selling their primary residence. There's a different tax exclusion that you can tap into for that. And currently for married couples, it's a flat $500,000. And for unmarried, it's $250,000. So you already have a built-in exclusion on a primary, but you do not have anything on a rental. And I do always tell people before they get into rentals at all, I make sure they understand, hey, if you had a primary residence and you move out of it and you want to hold on to that property and rent it, if you rent it for a certain amount of time, over 2 years after you've moved out, you're now subject to tax when you sell it. But if you sell it now, no tax. So there is a lot of implications in this for people to understand. So Gina, tell us a little bit more about how the exchange works and the benefit of the deferral.
So, like you said, the benefit of the deferral is, you're kind of kicking the can down the road a little bit with regard to the taxes. You're not going to pay them at that point when you sell, as long as you're able to purchase something as the replacement property. So you'll hear those terms that we use in the industry: relinquished property, replacement property. Relinquished is the one you're giving up. You're relinquishing that property. Replacement, obviously, kind of makes sense. You're replacing that property that you sold. And so that allows you to be able to defer any of the taxes from the sale. One thing that some of our clients, think when they do the exchange is that in order to defer taxes, that they only have to use the cash that comes to us as your qualified intermediary. And that's not the case. If there's any debt on the property, that amount also needs to be replaced when you go to buy, which is why we tell our clients, you should be looking to buy equal or greater than what you sell.
Okay, let's just stop right there because you said a lot.
Yeah.
Yeah. So in this process, there's certain rules and formulas you're going to have to follow in order for this to be successful. If you don't follow this to a T, you're going to have to be writing that check for that $20,000 and you mess it up. So basically, you're going to mess it up. Someone like Gina at a company like hers, Realty Exchange Corporation, all they do is guide people through this process and become what's called, you called it
qualified intermediary.
Qualified intermediary. You have to select a qualified intermediary as part of the process. So Gina and her company can be that person for you. And that is an essential element to this process. So when you sell your rental property, unlike regular sales, you don't get your proceeds sent to you. They go instead to your qualified intermediary. So you do not get to touch the money. Okay. Because there's a period of time between when you're selling your rental property and when you're buying your next one. It may not happen back to back. So that period of time where you get your you made $100,000. It doesn't go into your pocket. It leaps over to the next transaction. But in the meantime, the space in between, Gina would be holding that via Realty Exchange Corporation.
Yes. So we kind of sometimes will say we're the middleman, or the bridge between your sale and your purchase to hold that money. Yes. So that was a very good. Yeah. That was a very good description, or a very good visual there. As the bridge in between the sale and the purchase to hold those funds for you. Otherwise, the minute that you receive that money, you're going to be paying taxes on it.
Right. And that's the whole point of doing this, is to avoid that.
Right.
So, Gina, when would you get involved in the process?
We get involved in the process once you have the property you want to sell under contract. We've had people that will call us saying, I'm getting ready to put my property on the market. Can we set it up? Really, we don't need to get involved until you actually have that ratified contract, because we'll use those, the details in that contract to create our documents that are required for the exchange.
Okay, perfect. Let's go to the second slide. And I'm just going to note as well, if you are going to sell a rental property and you are interested in doing a 1031 exchange, you do need to tell your listing agent, because there is a required addendum that we have to attach to the paperwork that specifically gets the buyer's okay and initial that they understand you're going to be doing a 1031 exchange. It will not, it's going to have absolutely nothing to do with the buyers, but they are required to sign an additional addendum. So there is some additional paperwork required. So please let your listing agent know if you are going to do a 1031 exchange. Okay. So one of the rules in a 1031 is that you have to buy, quote unquote, a like kind property. And Gina, where does the word 1031 come from? I think we should tell people that, because that's important.
I'm really not sure where the whole 10th, I think it was the point in the IRS code where they were writing, all of their rules and regulations. It just happens, that's the number, kind of like when they do House bill number, 1234, they were at 1031. So
that's exactly right. Yeah. So that's where this crazy number came from. It's just the number in the tax code. Yeah. So if you look it up, 1031 tax code, you're going to see these words, right? Like kind exchange. So explain to everybody what does this mean, and how does it work?
So like kind is simply exchanging one property for another, one investment property for another. That is the like kind aspect of a 1031 exchange. We do have people that get tripped up on like kind, thinking that they need to buy the same type of property that they sold. So they're thinking if they sold a townhouse, they have to buy a townhouse. And that is like kind, which that's not necessarily the case. If they were to sell a townhouse, they can buy a single family home or a commercial property. It's investment for investment is really what the like kind definition is.
So can someone buy raw land if they're selling a townhouse?
Absolutely. Raw land is inherently an investment property, because you can't live on it. You can't really make it your primary residence because there's nothing there. So inherently, the IRS has deemed raw land is a qualified property to be able to sell or purchase in an exchange.
And let's say someone wants to sell a rental property and open up a hair salon and buy commercial real estate. Is that considered a like kind exchange?
The like kind exchange would be for the actual building that they bought, or the condo or whatever real estate they bought. The business part of it would not qualify, because it's not the actual real estate. It's real estate for real estate. Yep.
Yes. Keeping it simple. Didn't mean to go that deep.
No, I'm actually glad that you brought that up, because we do have, clients that will want to buy a business in addition, or that, that's already tied to that real estate. And, so we have to advise them, or even sell, if they're running a business out of property that they're, that's the investment, the business portion of it is kept completely separate from the real estate portion.
Okay. And these are the kinds of things that Gina and her team are going to guide you on, because there are a lot of little itty bitty details and questions that come up. If you had a rental property and you were depreciating it on your taxes, there may be implications on your numbers, right? So I think that the important part is one of the big steps, it has to be like kind exchange. So you cannot sell a rental property and buy your dream home that you're going to live in, correct?
Correct.
That's
Correct.
not like kind. That's personal commingling with business or rental matters. So a lot of times I do see clients that they may have purchased a condo to live in initially, and then they move out and they keep the condo as a rental. They move out and now they buy their primary home. Can they now take the condo that was originally a primary, but now it's a rental, and do a like kind exchange and use a 1031?
They can. They can, because at the time it's being sold, it is the investment property.
Okay. And what is the how do you guys determine that? So let's say somebody moved out of the condo and rented it for a month and then they want to sell it. Would that be considered a rental at that point?
We would, because of the holding period that the IRS wants to see, we would probably advise them that they haven't, there's some risk there if they did that.
Right. I think so.
We want to make sure, the IRS likes to see a 2-year holding period of an investment property before doing an exchange.
Yes.
Like I've said, I've told my clients it's not a hard and fast rule. It's just the safest way to handle an investment property when you do an exchange.
Yes. Yes, agreed. So I always, let my clients know, look, if you're going to rent out something that you were previously living in, exceeding a period of 2 years, consider it tax worthy when you sell. Consider it an investment. Like the way I was reading it, anything under the 2-year period, you can still use your built-in exclusion of $250,000 or $500,000, because you have to have lived in it 2 out of the past 5 years.
Yes. And then there's a calculation that's done based on the amount of time you lived versus the amount of time that it was the investment.
Okay.
For deferring the taxes on the investment portion.
So again, Gina and her team will figure all of that out. But I think the biggest key takeaway for today, and we're not even through the show yet, but the biggest key takeaway is, if you, when in doubt, just ask. Call Gina, call Realty Exchange Corporation, call before you sell anything, get your questions answered. So that way you're not walking down a path with any surprises.
Correct. Yes. Yeah. We always appreciate the clients who will call us first, even before they have their property on the market, to ask those questions. And so we can help guide them beforehand. So we're not getting thrown in at the very last minute, trying to coordinate everything, get everything figured out. Will this work? Will this not work for that particular client? Right. So the earlier you can at least get to us to at least, tell us your process and your plans, the better off we're going to be able to serve you.
Yes. And again, the listing agent has additional paperwork that needs to be done. The intermediary has to be hired, someone like Gina and her company, and the funds must go there after settlement. So if you miss any of those steps, it's not going to work. You're going to essentially just owe the tax and be cashing out. Let's go to the next slide here. So there are some pretty strict timelines in place in which you have to do things. So Gina, I'm going to let you elaborate on that just to explain to everybody some of those guidelines.
Yeah, the 2 timelines with a 1031 exchange are your 45-day identification and your 180-day exchange deadline. Both of those deadlines will start on the day of closing of your sale. So when you go to closing on that property that you're selling, that starts the clock ticking.
So what is the first deadline about? What is that 45-day? What do you mean by that?
The 45-day identification, and that is the most crucial one for the exchange. That's the amount of time that the clients would have to tell us, these are the potential properties that we would like to purchase with the exchange. If those properties are not identified within that 45 days, we're done. The exchange is going to end because we don't have anything to purchase. And then the sale, it's just going to be treated as a normal sale, and they would be paying their taxes on that sale. So, typically in our experience, if an exchange is going to fail, it's going to be within that 45 days because they may not be able to find anything to identify to us.
Right. With inventory being so low, this could be a part of the process that just doesn't work out. Right. So
Right.
is there a limit to the number of properties that someone can put forth? So for example, let's say they do a home search and there's 10 townhomes in the area that they're interested in. Can they give you all 10 addresses and say, we're going to go look at all 10 of these and hopefully write on one of these?
Yeah, so I'm glad you asked that question because there are a couple of rules within the identification that we need to adhere to. The first rule is the 3 property rule. That rule states you can identify up to 3 properties, and it doesn't matter what the value of those properties are. So you can identify 3 $1 million properties.
Okay.
The second rule is the 200% rule. And that would come into play if you were to identify 4 or more. So using your example, they look at 10 or want to look at 10 properties that they potentially identify. If they do identify those 10 properties to us, that kicks in the 200% rule, which states that the total value of all the properties when you add them together cannot be more than 2 times of what was sold. So if they sold at $500,000, they put 10 properties on there, those 10 properties added together cannot be more than $1 million.
Okay.
If
So
it is more than $1 million, a third rule is going to kick in, which is the 95% rule, which states if you identify 4 or more and it's over the 200%, you have to buy 95% of what you identify.
okay. So is the best strategy really in this point of the process? So again, I just sold my rental property. My 45 days started ticking yesterday because I closed yesterday. I don't have the money. The money went to you. Would it be better then for someone to go out and look at all of the properties they're interested in and then send you like, these are the 3 we're writing on, or these are the 2 we're going to submit offers on?
Yes, that really is. And that's the majority of our clients do stick with that 3 property rule just because of that whole value prospect. We do have clients that will go into the 200%, but most of them stick to that 3 property rule. The other thing I want to say is, if we're within the 45 days of the identification period, and let's say somebody were to send me an ID on day 20, and they go out and they make their offers, but none of their offers are accepted, they can submit a new identification because we're still within the 45 days.
Okay. Perfect. So we can write on a contract in day 2 and lose it. And then we can identify a new one and write on a contract in day 5 and potentially lose it. And then we could identify 3 and write all 3 offers and maybe get one and then let you know, but this is the one we're doing.
Yep, exactly.
Okay.
Exactly.
And also tell a little bit with the strictness of all of this, the value of the new property you're purchasing has to be greater than the value of the property you're selling. Is that correct?
Yes, you need to be equal or greater than what you sell in order to defer all of your taxes from that sale. That being said, we do have some clients who we call it buying down in value. So maybe they're selling at $500,000, but they're only able to find something for $400,000 that suits their needs. There's $100,000 delta there, so they would be paying taxes on that $100,000.
Okay.
That they didn't replace when they bought.
Okay.
The other thing I want to mention with regard to the value is there are some selling costs that can be taken off of your sale price to reduce what you should be targeting as your replacement. The biggest one is typically realtor commissions. That's usually a big chunk of change that sellers have to pay when they close on the property. So let's say, again, selling at $500,000, if they have $20,000 in commissions that they're paying, now they can look at something for $480,000. That's going to be their target versus the $500,000. And there's a few other costs in there that can bring that value down a little bit. But that, like I said, realtor commissions is typically the biggest one.
So that makes sense then. So once someone's they know they're going to do a 1031, they have their property under contract. That does make sense at that point that you get involved, because then you can see everything. You can see the sales price, you can see any seller subsidies, you can see closing costs, and run your calculations from there. Then you can go back to the client and say, okay, if you want to defer all the taxes, you need to shop for a property at 480 or above.
Yeah, exactly.
Right. So you can kind of run the math and let them know.
Yeah, and our website also has a good calculator that people can plug in numbers and see, if they think the exchange, is going to be worthwhile to them.
Oh, that's great. You said there's a calculator on your website?
Yes, on our website. Yep.
Okay, we'll get your website information up here at the end for everyone to grab. But that's probably pretty fun for people to play around with, I would guess.
Yeah, it is. It sure is.
Okay, awesome. So we have the 45-day window, which we just talked about, and then tell us about the other window, the 180-day window.
180. So that's the amount of time you have to complete the entire exchange. Should you identify properties, you have 180 days from that closing date of your sale. Once you've identified property to us, and then if you're able to get something under contract, excuse me, you basically have another 135 days after that 45-day deadline to close on any of those properties. Once we do receive that identification, we're locked into whatever's on the list. The list cannot change after 45 days.
Okay.
Unfortunately, we've had some clients who have come and said, none of these properties are going to work for me. None of my offers were accepted. Can I change my list? Can I go look for new property? Unfortunately, the IRS rules say no. Once we have the list after day 45 locked into that list, we can only send funds to purchase from that list.
Okay. And if somebody is unable to identify property in that 45-day window, how does it work with releasing the funds? Is there a fee?
Well, if they're unable to identify, they just say, will come to us, whoever their coordinator is, and say, wasn't able to find anything that suits my needs. On day 46, we can release the funds back to them.
Okay.
The next business day.
Okay. Perfect. So you can, and sometimes people may just want to try to do 1031. And if it doesn't go through, really no harm, no foul. There's a small cost of, for Realty Exchange Corporation to have been involved. It's not, I don't think it's much. If you want to share your fees with everybody, I don't know.
I have no problem. We charge $950 for a standard, exchange for exchanging just one property for another property. So if you sell one, buy one, we charge a flat $950 for that.
There you go. So if you're not sure if you want to do a 1031, for $950, you reserve that option to do it and to look for new property for 45 days. If it just doesn't work out, you're out $950, but you at least took advantage of all of the options available to you as an investor, right? Selling your property. So I think that's a really great price point for someone to have that option to do a 1031 and save potentially $20,000 to $50,000 in taxes, even more sometimes.
Yeah.
But to your point, you're not out of paying the taxes, right? So now if you do the exchange and you buy another property and close within that 180 days, now you have a new rental. Yeah. So let's say you go to sell that down the road, you're going to be back in the same spot, right? You either have to sell and pay taxes on the gain or roll it over to another exchange. So really, once you have rental property, there is no way around divesting without a tax consequence that I can see, unless you sell at a loss, which is also a consequence, a negative consequence. So there is a cost to everything you do in life, right? But hopefully the money you make through the rental and the appreciation far exceeds, the taxes that accumulate. Anything else you want to say on the timelines, the 45 and 180 day rules?
No, because they're pretty straightforward. They're pretty standard. We do get clients and we'll be like, can I get an extension? Can I? Unfortunately, no. The IRS has been very strict on those 45 and 180 day timelines.
And are these rules are the same throughout the whole country because it's IRS 1031?
Yes, 1031 is a federal program, so it doesn't matter, where you sell and buy. The rules are always going to be the same.
Perfect. Okay. So let's go to the next slide. So Gina, this is really just directly for you, like
Mm.
your role as a qualified intermediary. What are some of the ins and outs you see all the time that people ask, or like what's your standard process that someone will go through when they're getting you involved?
Yeah, so like we talked about a little bit earlier, our standard process is once you get that ratified contract, get in touch with us. We'll get your exchange set up. We'll get in touch with the title company that's going to handle the closing so that they'll know, as a seller, you're going to do an exchange and that we're going to take the cash, from the sale to hold for you after the fact. And then, then it's on you, as the buyer now to go and find that investment, to go find that replacement property. That being said, I do want to backtrack just a little bit and say, there is nothing against the rules that states you can't have your replacement property under contract before the property you're selling. You can have it, people will find a property they want to buy.
Okay.
And then they say, okay, I want to buy this property and then I'm going to sell this one. You just need to make sure that the closings are separate, that the sale closes before the purchase. But there's nothing against having that property under contract. And those are actually the exchanges that we really like, is when somebody comes to us with both their sale and purchase contract.
They're guaranteed.
Then, we feel good, knowing that they've, been able to satisfy the requirements of the exchange. One of our hardest things to do is when we have to send money back to our clients. It's tough. Because we know why they got into this. They know why they did this exchange with us.
Right.
And having to send that money back to clients is just, it can be tough. It can be tough.
Yeah. I didn't know that. That's a pretty slick way to go about it, because then you're ensuring that you're going to be able to do the exchange.
Yeah, that you're going to be able to complete it and be able to defer those taxes. Yeah.
Okay. Great. So again, there's a flat fee charge. Gina and her company will get involved, walk you through all the ins and outs, make sure you understand the 45-day rule, make sure you close on time so that everything completes. So let's say it is going to go through and the investor goes to settlement on the new property. Do you send the money over to the title company, or do they get it at that point?
We do. We pretty much go through the same process on the replacement side as we do on the relinquished side, where we get that contract, get the title company information or attorney, depending on where we are, because, we do these all over the country. And, we have a big presence down in the Outer Banks area. Nice. So we know down in North Carolina, they use attorneys. Here in Virginia, we're using title companies. So, whoever's going to handle that closing, we just need that information from those, so that we know who to send our documents to, again, so they know there's an exchange involved. And we can get, the wire information to be able to send the funds directly to that title company in advance of closing. So make sure that we're not holding up closing for any reason.
Okay, fantastic. I didn't know you were all over the country. That's good to know.
We are.
Oh, very good. You're located here though, right? In Virginia?
We are. We're located in Northern Virginia, yes.
Okay. Lucky us. Take you out to lunch. Great. And let's just throw up our last slide. I think we covered some of this already, but any other exceptions or rules that we haven't covered at this point?
Nothing that jumps out at me is, the primary residence is the one thing we'll run into quite often. And people will think that there isn't some sort of an exchange process for doing the primary, but there's not, just simply because they have that primary residence exclusion already.
Yep.
So, that's really the biggest exception to the 1031 is it cannot be a primary residence. It cannot be personal property. Personal property used to be part of the 1031 process, but they took that out in 2018. Personal property being things like, maybe the furnishings in the house or something like that, Okay. You used to be able to have that as part of the exchange. And then second homes do not qualify. You can't buy a property as a second or sell a property if it's your second home that, you live in. Okay. One thing I do want to say is that there is some, I guess I'll call it wiggle room for some personal use of your investment property. that's within the IRS rules that they've said you can use it, have it for personal use for the greater of 14 days or 10% of your rental time. So if you
Okay.
were to rent it for 300 days out of the year, you could personally use it for 30 days and it would still qualify as an investment and not a second home.
Okay. Yeah. So again, if you have any questions about this, let's say you have a second home that you're renting most of the time, but like Gina said, using it some of the time, these are the things you can reach out to Realty Exchange Corporation and ask. They are so helpful on the phone. I've called them so many times, and no matter who answers that phone, they know the answer right off the bat. I mean, and they're just really there to help and guide. I have found this company to be fantastic to work with. We personally have used them, and I definitely send all of my clients your way. Gina, if you want to tell us a little bit about how people can get in touch with you.
Yeah, they can go to our website. It's www.1031.us. They can reach out to me directly. My direct line is 571-895-3248. I am more than happy to pick up the phone and answer questions that anybody has. If they want to call our main line, like Elizabeth said, everybody in our office is very qualified to answer questions. And just give a little bit of background about our company. We are actually going into our 35th year in business.
Oh, wow. Congratulations.
Thank you.
That's huge.
Thank you. Yeah. Ed Horan founded our company way back in the early 90s. His son, Bill, took over about 20 years ago, and now his son, Jeff, is on board. So we're going third generation family-owned business. And
great.
as my boss likes to say, our little shop here in Gainesville, Virginia.
How many people work there?
Handling, many exchanges throughout the year. So,
how many people work at Realty Exchange Corporation?
We're really not that large of a company. I want to say now we're probably 20-ish.
Oh, that's what I figured. Yeah.
Yeah.
I figured.
So, and it's a very, we're a very close-knit group. We all get along very well. Our, Bill, who's our, current owner now, he makes it a great place to work. And he's very, very, very knowledgeable. And he has, if we get a question, because there are times we might get a question that we don't know the answer to, he has no problems, picking up the phone and getting on the phone with that client or shooting an email off to that person to clarify and make sure that they're understanding, and getting their question answered and understanding the entire exchange process.
Great. And just out of curiosity, approximately, and I don't know if you know this, how many exchanges are done every month or every year through you guys? Since
we are averaging about 100 exchanges a month.
Oh, wow.
There was a point in time, when the real estate market was really booming, 2-3 years ago, we were well over 200 a month.
Oh, wow.
Yeah.
All that money being rolled over and escaping Uncle Sam for a few years.
Yeah, exactly.
Exactly.
So yeah, it's
interesting.
We take pride in what we do, and trying to help these investors to make sure that they're, I hate to use the word taking advantage, but I mean, really, that's kind of what, this is there's a reason that this is out there is for these investors to be able to do. So,
yeah. And also that it entices people to keep their money in the real estate market.
Yes.
Right. Because if you sell, writing that check is painful. It entices people to keep money invested in the real estate market, which helps, the economy. So I think it's great. Gina, oh my gosh, thank you so much for coming on today. Any closing thoughts you'd like to share? We really appreciate your time. Thank you so very much.
No, I thank you for allowing me to do this and, get the word out there, because, we do have, we're kind of surprised at the amount of people that don't know about the 1031 exchange that we get, that they're like, I'm just now hearing of this from either my CPA or my attorney or my realtor. So, just being able to get more information out to everybody is great. One thing, you talked about earlier, with the contract and the addendum, relating to the exchange. if someone's realtor doesn't have anything like that, if they don't have an addendum that they can put to their contract, we have form addendums that we can supply, that we can provide the realtor or the client that they can simply attach. Like we've been here 35 years. We've refined this process, pretty quickly, and pretty concisely. So we're very, like I said, we're very proud of what we do.
Great. Well, that definitely shows. Thank you again, Gina. If anyone would like to reach out to her or her company, please feel free to do so. They are fantastic. Again, they service every property in the United States. So
yes,
everyone can call in.
Yeah, give us a call.
Thank you again, Gina. All right, great. Thank you everyone for tuning in today. I hope you found the 1031 exchange information insightful. Certainly there are more questions, more things we could have continued to talk about, but if you have more questions, give us a call at 703-829-LIST or give Gina a shout out. And I will see you all on the next episode of List with Elizabeth. Thanks for tuning in today.
When you're ready to sell your home, don't be silly and do it alone. You gotta get Elizabeth on the phone or go to listwithelizabeth.com. List with Elizabeth, list with Elizabeth, your friendly neighborhood real estate pro. List with Elizabeth, she'll get you top dollar when your house is sold. So when